Welcome to your final mortgage insider update for 2025. It's December the 29th. Quick update on markets starting this final trading week of the year. Stock market's down a little bit and helping bonds after the Santa Claus rally, so to speak, has been kind of quiet on the stock market. It is at an all-time high, pretty good if you are a stock investor. Interest rates have been maintaining a pretty safe level in the low sixes. Looking to trend down a little bit as we start this week off. Next big news items will start to come out next week with the full month of December unemployment numbers next Friday. So not little time before we're going to get that update out to you. But in the meantime, a positive turn at the end of the year as we hope to bring a few more sales into the real estate market. If you got a deal that you can hash out with a seller that really wants to sell, some of those folks are giving or allowing credits or closing costs to help reduce interest rates at a time where interest rates have actually one of the lowest points of the year at this last year of the month. Let's take a look. And we can see a little bit lower on the 10-year Treasury at 4.116, not as low as we've seen at the lowest point, closer to 4%, but definitely a trend in the right direction. Prices on mortgage-backed securities are rising. That's the inverse of the investors paying a bid to buy the bonds. That's driving interest rates down for the consumer. So we're going to focus on the 10-year Treasury as just a point of reference. You can see a battle starting at the 25-day moving average, kind of a stopping point. At this point in the trend, we've definitely been on a downward trend over the last 100 days. That's the purple line, which we're just floating just below that right now. Nothing crazy as far as news other than the end of the year. A couple of trading days left, partial day on New Year's Eve. So stock market will be closed on Thursday for the new year. We won't get any major reports or anything to talk shop about on this Friday. But starting next week, all the new reports for the new year will start to come out. Oftentimes, there's some very dodgy trading that happens at the beginning of the year. Maybe we'll take a quick look at that. Just a little macro look back. Well, I guess the end of 2022, towards the end of 2022, interest rates were down. This started a trend. A lot of people remember 2022, 2023, and especially 2024 were much higher as overall interest rates. So the beginning of 2023, there's obviously lots of up and downs as you look way back in the market. These were pretty volatile times. Federal Reserve was raising interest rates. We saw the 10-year Treasury peak back in October 2023, receded a little bit, or quite a bit, but on the average was still on an upward trend following the blue 200-day average line. If we see since the last 18 months, since June, July of 2024, other than a couple of dips lower, pretty deep dip lower at the end of 2024, only to be, brought way higher. This last year has actually been relatively calm. We have trended down and we are at the very tail end of what looks to be a calming market. This is in the face of Federal Reserve policy continuing to cut interest rates, but not cut them too much. They're being very careful. There was thoughts back here that the interest rates were from the Federal Reserve were going to be cut to today's levels back a couple years ago when that was obvious that was not going to take place. Trend went higher on the overall 10-year. So a positive end to 2025 with less volatility. I think less volatility is what consumers really need in order to get their confidence level back into the real estate marketplace. Sellers have obviously had to reset their expectations. There's been pricing drops. I think asking prices were 10% higher than they needed to be, and they had to lower their price 10% or more sometimes to get an offer. A lot of homes coming off the market, one of the biggest years in a long time since pre-COVID, that we have a higher percentage of homes being delisted, meaning they're just not available for sale on the open market. Those were people that thought about selling. They had a price in their mind. So if you look back at some properties that had been delisted, there are opportunities out in the real estate space, especially in a time where, especially in a higher price position, you might need to sell your home in order to buy. I'm hearing lots of opportunity out there with trying to make deals on homes that are not necessarily on the market, but folks are probably going to list their homes in the spring. And if you can get ahead of that and find a home that you really are interested in, you can get your home sold in a contingency if that opportunity were to be very specific on on a home that you've seen on the market this year and been delisted. So just a thought there as we end this 2025. Make it a great New Year's. Be safe and be happy. Take care.